Happy Friday. So, I know it's Friday. Everybody's excited for the weekend. And what better way to end your week than listening to me? Am I right? Um, last week I did a video. I shared some numbers, some extra numbers for you. I actually had some people comment that they wanted more numbers. They wanted me to nerd it up a little bit more. But you know what? I was going to wear my glasses for this video, and I forgot them at home. So I couldn't nerd it up too much since I forgot it. But I am going to add some more numbers to you. We're going to talk about normal. Is the market finally coming back to normal, right? Does anybody even remember what the heck normal is? Who knows? But the housing market has been anything but normal for the last 11 years. So we're going to share a little bit about the past, a little bit, hopefully some future projections, and then I'll end it with a brief sample. So, well, after the bubble burst in 2007, we saw values depreciate at 6.1% annually. So, and that happened all the way until early 2012. Then after that, we saw a wild swing from March of 2012 till today, where the market actually recovered with values appreciating 6.2% annually. So those wild swings, they were caused by just supply and demand. So kind of just the simple aspect of supply and demand. When the market hit its peak in 2007, what happened is homeowners and builders were trying to take advantage of that market. And it was fueled by irrational growth. It really was. So inventory levels actually grew to over 7+ months. And then with that many homes available for sale, there just wasn't enough buyers to satisfy, the number of homeowners and builders trying to sell. So prices began to fall. Then we saw, and we probably all went through and lived. What's going on, John? Thanks for jumping on. Appreciate you, man. But yeah, then we saw the foreclosures came. So what happened after the foreclosures, we actually eventually hit 11 months of inventory. And that caused the prices to crash all the way until early 2012. And then by that time, the inventory levels had fallen to 6.2 months, and the market began its recovery. So what happened over the last 5 years? Now that we've kind of that brief history lesson for y'all in the market, over the last 5 years, inventory levels have remained well below that 6-month supply. And I know you've seen a couple of my videos, probably the video I had last week. 6 months supply of houses on the market is what constitutes a normal market, right? So, and as a result of that being below that 6-month supply over the last 5 years, we've actually seen home prices increase over that time at a percentage well above the appreciation levels seen in a normal market. So that was the past. The future, right? So a couple months ago, we saw about 3 months worth of supply. It's grown slowly up to about 4.5 months worth of supply. So that's the current inventory level. What that means is prices should continue to appreciate as the above normal levels, or at the above normal level, sorry, and which most experts believe will happen over the next year or so. However, two quick things I want to share with you that occurred that are pointing to the fact that we're moving towards a more normal market. One, listing supply is increasing. So I got a couple numbers down I was trying to look at. So over the last, it says the inventory has increased over the last 2 months after 37 consecutive months of declining. And that's hard to wrap your mind around, but 37 months, consecutive months of declining inventory levels. And we finally hit 2 months in a row now where they've increased. So listing supply is increasing. That's number one. Number two, and if you watched my video from last week, I actually went into a lot of detail on why experts think that buyer demand is softening. But that's number two, buyer demand is softening. So we're seeing the supply increasing. We're seeing demand kind of starting to soften up, and we're looking to move towards a more normal real estate market. So it's not going to be a buyer's market like we saw from 2007 to early 2012. It's not going to be a seller's market like we're seeing from middle of 2012 till today. We've really been living in the seller's market for quite a long time now. What that means is prices won't appreciate at the levels we've seen recently, but nor will they depreciate. It'll be a nice balanced market where the prices remain steady. Buyers will be better able to afford a home, and sellers will be, it'll be more easy or easier for them to move up, move down, move out, whatever it takes. So picture this. So picture, which I know none of us do, but picture that you're driving down a road and the speed limit is 60 miles per hour, and you've been driving for a long time at 85 mile an hour, right? I know I don't do it. You guys don't do it. I know you guys don't. But you see a cop, then you automatically have to quickly slow down to 60 miles per hour. What that feels like is you feel like you're at a crawl now because you've been going 85 miles per hour for so long. That's what it's going to feel like. It's good that we're normalizing, but it's going to feel like we've been driving 85 miles per hour forever, and we're now slowing down to the normal speed limit of 60 miles per hour. So feel free to reach out with any questions. That's my numbers follow-up. Not too many. I know that I had some people that wanted more numbers, but I didn't want to scare off everybody with a bunch of numbers. So feel free to visit jasonwhitehomes.com. You can check the value of your home. It may be worth more than what you think right now. You can also check out my books on there up in the more section of jasonwhitehomes.com. Feel free to shoot me a message. If you're interested in a more detailed value report for your home, feel free to text me, shoot me a phone call, message me on Facebook. I look forward to speaking to you guys. So have a great weekend. Enjoy any homecomings that might be on the horizon tonight or next Friday. And go Lions, right?